Hello, good day, everyone. How are you doing today? And good afternoon to you. This is Tech Rounds on Tech Build Africa. I'm really glad to bring you another episode of this very interactive but yet an insightful session where we talk about tech topics and insights from thought leaders and innovators in the ecosystem. And I promise you today is not going to be an exception, as I have with me someone who is very much equipped with information about the startup funding ecosystem, as we will be looking at understanding the investor perspective when it comes to the funding scene. Yeah, I will be doing this with Nzube. Nzube is already in the studio, and I will bring in Nzube up for this session. Hello, Nzube. How are you today? Good afternoon.
Hi, good afternoon, Emmanuel. Thank you for having me. How are you?
I'm fine. How do you feel today about this session?
I'm actually pretty excited. Couldn't sleep last night getting ready. No, just kidding. No, this is good. I think, and thank you for that kind introduction. I think, yeah, there's a lot that we can discuss. Looking forward to the comments, looking forward to the feedback and the responses from your audience. So excited, yeah.
Yeah, thank you very much. I'm glad that you're excited. So, if you're excited, then I'm over excited about this session. And I can't wait for us to unravel the hacks and the insights we have as regards to the startup funding scene. All right, so I'll just look at a brief bio of Nzube before he actually says what he is. So, Nzube is an entrepreneur, an investor, with an angel VC, a producer too, and a model. So, he currently serves as a corporate finance director for SMADE Entertainment Group, former investment manager for Wayra in UK. So yeah, Nzube has every qualification to speak on this topic, very topic here today. And yeah, when we're speaking about the startup funding scene in Africa, we can see there has been a tremendous increase in the innovation sector of Africa generally, and how you see everybody is building something today. Everybody's building his or her own innovation in one way or the other. And one way we can encourage people coming out with such innovation is when they can position their products to attract funding. And how do you attract funding is basically how you pitch your vision to your investors. Apart from your investors, you also have to ensure that you are positioned for your consumers to share in your vision. What's the story around your product? What problem are you solving? So I think those are some key things we will be identifying today. And then the African startup ecosystem has experienced exponential growth, and in the past decades, thanks to the innovative ideas emerging from the region. So, however, a lot of founders still struggle with the funding game. And why are they struggling? Those are the things we're going to be looking at today. So, in this interactive session, we delve into the minds of investors to uncover what drives their decisions and what they seek in potential startups. So, what are the investors looking at? So, if I am an investor, what am I looking at when you tell me about your proposition? What do I see when you present your innovation to me? So, I guess these are very important things to look out for. So the ultimate purpose is to better advise and equip startups and entrepreneurs with the techniques of positioning their ideas to attract the interest of investors. And yet I'm very glad to have someone in the studio who would be doing justice to this topic. So, for starters, I want to urge you to, if you are watching this episode now, please go on, share on your platforms, share on every social media platform that Tech Rounds is live, and no one should miss this, especially if you're an entrepreneur or a startup founder. Okay, so let's look at the basics. So, what is startup founding? So, it's actually the process of raising capital, financial capital, from various sources to support the growth of your innovation, to support the growth of whatever you're building. So it's a significant funding to upscale your operations. Okay, all right. So Nzube, it's glad to have you on this show today. So I would leave you to quickly do your brief introductions. How do you want people to see you, and what are you doing in the ecosystem, Nzube?
Thank you. Um, Afa m bụ Nzube Ufodike. I'm Igbo, mana family m ebe a na Birmingham, UK. So, and I grew up in Jos, Etum na Jos. I'm based here. For those that don't speak Igbo, I just said my name is Nzube Ufodike, even though I was born in Birmingham, UK. I grew up in Jos, Nigeria. And I'm based here in London, UK. So what I currently do is manage a portfolio career. So I do several things. It's sometimes tricky for people to put a handle on what specifically I do. But I'll say, in a nutshell, it's adding value to companies, helping small to medium-sized businesses that are trying to scale. So I come in as an advisor with my team, support them with their strategy, fundraising, and introductions to help them get from where they are to where they need to. And I do that under the brand Amu Advisors. And I know that there's a real problem, as you've mentioned, when it comes to attracting capital from the right financial partners. It's not the easiest thing for startups in any part of the world, not just in Nigeria. In the UK, it's just as tough. In the US, it's just as tough. In China or anywhere else in the world. As someone that's trying to build a vision where you haven't proven all the specific elements of what that vision is, there's always a challenge. So we can talk through that in some detail. But what I do is help de-risk and give information from an investor standpoint that will support the entrepreneurs with their fundraising journey. And earlier this year, I also started an angel syndicate. I've been an angel investor for over 10 years, and I have nearly 12 companies in my portfolio. So I'm not a prolific investor, but I thought it would be worth putting together a few people that are interested in capital allocation to come into rounds with me and back companies that I discover. So we don't have any special purpose vehicle to allocate. We all invest individually into entities under the banner of Amu Angels. And Crowncast, last but not least, is a platform that I co-founded that's focused on financial education for SMEs. And the reason I do that is not everyone can afford an advisor or afford to, or doesn't have the network to get the access to the people or the resources that'll get them through to the right financial partners. So Crowncast is content that's, hitting just that point, giving advice to companies that want to make sure they have the right sort of foundation when it comes to finding the financial partners to get their company to the next stage.
Yeah, thank you very much. Quite interesting. So, like, I think I wasn't mistaken when I said you were quite the right person to give insight on this topic. So I can see you have over 10 years of experience tied to your belts, and that's amazing. And then the portfolios of companies you have under you over the years. Yeah. So we know that startup. When you talk about the startup funding processes, there are a lot of stages from bootstrapping. You need to go through bootstrapping when you're starting off to the different funding series, and those are the things we'll be talking about actually. But before we actually step our foot on the gas, I want to explore what are your views about entrepreneurship generally in the tech ecosystem.
So I think entrepreneurship is a very concrete, inspiring way to not just create but also redistribute wealth. So I sometimes call myself a conscious capitalist. I think when it comes to the systems that governments or societies use to support and enable citizens, good citizenship, capitalism with a lowercase c, has lifted the most number of people out of poverty. And entrepreneurship is a real way for people to, do the good work of getting access to the resources that will be needed to help make society better. So I'm an avid believer of empowering people, giving people choices. And I think entrepreneurship is a really good way to do that.
Right, quite interesting. Thank you very much for that response. So now moving ahead on the startup funding scene, what is your overall perception on how it is fostering the innovation drive? So I've spoken about how over the years African startups have boomed, and we've seen a lot of startups in fintech and different solutions coming up to the scene. So do you think, what's your perception? Do you think that it's the funding has been the basic boost that has created these opportunities for these startups to come up?
That's a really good question, and it's a kind of chicken egg situation, right? I think the tech ecosystem has been going on for in Nigeria for longer than most people would acknowledge. We have people that have been
Yeah.
doing things within various sectors for a while and innovating, maybe slightly under the radar and not getting the sort of headlines that we now all read. Nowadays, there's a lot more funding announcements, especially in fintech, and we've seen that drive a lot more interest on a macro level in the region. Um, Maybe the last 8 months have been more challenging in the region, but that's in line with general funding across the world. So VC as a segment pretty much collapsed in the UK and Europe early this year, and it started to kind of wobble late last year. When I say collapse, I mean funding volumes in terms of capital allocation
Yeah.
and in terms of number of deals, went down by
Number of
over
persons
70,
getting funded. Yeah.
80%. Exactly. So from that perspective, um, African countries are not immune to that sort of tightening, economic tightening that we're seeing globally. So I think more recently we've seen more down rounds, even in those companies that were just going through massive growth spurts and getting more and more capital. This is a period that money is harder, is not as easy as 2 years ago to raise capital, or even as last year. But I think that innovation itself that's happening is kind of still encouraging capital flow into specific niche areas. So, I mean, everyone knows about, investments to go to the painkillers, not multivitamins. As long as there's something a problem, there will be capital to get into your venture if you've structured your approach to fundraising right and you have the right framework for capital allocators. And one final point I'll make is when it comes to investments driving innovation, I'll say it really should be more around solving a problem that will drive the innovation. And then once you're solving a problem, you've identified a market, there's a solution, there's some product market fit, you have some traction, you've started to de-risk in your own unique way, you started to de-risk that opportunity. It then makes it easier for an external capital provider to come in. And it doesn't have to be an investor. You could think a little more broadly about the type of capital partners that you seek out. It could be a grant funder, it could be any other type of, money that would
Yeah.
come
So
to help you get
I
to the
was
next
getting
step.
to this point actually. Yeah. Can you hear me?
Yes, loud and
Hello. Can
clear.
you hear
Loud and
me?
clear.
All right. Yeah. So I was getting to the point where, because I wanted to take it step by step, so that if we're having some emerging founders and entrepreneurs, they can at least take home some of the basics. So yeah, I'm coming right there. And now I think I want you to actually bring it out there, the types of investors that we actually have, and how their investment options vary, because it's not just enough to want to attract an investor. So you also need, I believe you also need to know, what kind of investor am I looking to attract to my innovation or the idea I'm having. So you need to also weigh and know what you're taking home at the end and what they are taking home. So I think it's a prerequisite to, at this stage, to actually know the types of investors that do exist and how their investment options or objectives are aligned with yours. So do you think you want to throw more light on this one?
Sure. It's going to be a long one, but I'll try and keep it brief. Um, and before I start describing, I would say there's no universal law around this. So as much as some generalizations would be made, you would always find an exception. But so if we keep that in mind, then I would say when looking at capital allocators, there are quite a few to consider. So investors come in all shapes and sizes. You can look at those that are giving equity or looking to take equity in your company, and those that are looking to take debt in your company. And I'll talk about a couple of options in each of those. And then you can look at those that are not looking to take either equity nor debt, but it's more about capital to help trigger your growth without anything in return except certain KPIs or certain reporting requirements. So that could be non-dilutive funding. It could be considered as non-dilutive funding in the form of a grant. And there's some structures of capital that would come in a mix of the equity debts or grant funding, or even revenue share, where neither equity nor debts or grants, but it's a kind of percentage of future income. So they're funding a specific element of your business. So I think the first thing is looking at the whole value stack within your venture, figuring out what your cash conversion cycles are, where you need capital injection to activate certain growth opportunities, and then figuring out, based on the different types of capital allocators out there, which ones can match specific timelines you might have. If you need short-term cash, if it's, let's say, a 3-month cash play for a particular trade, there's no need to sell equity in your business because that's quite specific. You're looking to just get maybe a project financier to give you a particular instrument on maybe debt terms. But if you're looking to maybe build a laboratory that's going to be testing blood samples and getting you unique enzymes or whatever, then you want to make sure that you have a longer term partner, because you're going to probably take a couple of years to get to the point of breaking even, you know. So with equity allocators, if we focus on that for a minute, there are quite a few different types. So there's the one everyone likes to talk about, venture capital. But I would discourage most people from considering VC because it's a game where, well, not a game, it's a sector where most VCs say no, and they have to, in terms of the number of deals they see versus the number of deals they evaluate versus the number of deals they place capital in. It's less than 0.01% for most venture funds. So if you have that 0.01% of securing venture capital, if the odds are stacked way against you, then why go down that route? Unless if you have something that you feel is specifically suited for VC in terms of its potential hockey stick growth opportunity. Another would be angels. So I operate as an angel as well. And these would typically be individuals that would want to place capital in a venture, either because they have some knowledge or expertise in that domain and they want to support and add value beyond the cash. So it's cash plus typically. With the angels, every angel is different. Angels would typically want to know that they have some degree of a relationship with the founder, because it's their own personal capital. It's not like their money grows in trees, right? They're investing their hard-earned cash, and they want to make sure that they've taken enough time to do some due diligence. So some angels take a little longer to place capital. I'm one of those that takes too long sometimes. But with respect to angels, sometimes they operate as syndicates. So just to clarify, in terms of the volume of deals that are done, normally VCs write much larger checks. So they can write checks, from the hundreds of thousands of dollars to the millions, tens of millions of dollars typically. Whereas angels would be less than 10% of that they can write. So write checks of maybe
Hello, can
1,000,
you hear me?
5,000. Yes, I can. Can you hear me?
Hello. Yeah, I think I was cut off for some bit because of network issues. Yeah. I was really following what you were saying. That the choices of investors, breaking equity, and where your objective should lie. So
Sure.
let's make this let's just cut to the chase. So what looking at the different types of looking at the different types of startups that we have people that are just bootstrapping, or people that have been in the scene, maybe have gotten like the first round of funding or the second round of funding. So what kind of investors would you prefer to these kinds of startups to be looking out for at those stages?
Sorry, I was rambling on the last time, but yeah. To the question, it depends on the type of
Yeah.
company. What does the company do? Is it a
Okay.
tech company? Is it a trading company? What does it do?
Hello.
Hi. Sorry, I was asking, what does the company do
Yeah.
for this example? Is it a
Okay,
tech
yeah. So
company?
I'm
Is
just
it a
giving these
trading
titles.
company?
I'm not okay.
Yeah.
Let's say a tech company. It could be fintech. It could be, but just a company that is offering solution in the tech ecosystem. And of course, we have. So I was trying to say, which class of investors would you recommend for the startups at these different phases of their lifespan? Okay, we have people that are just starting up maybe from bootstrap, and we have people that have maybe raised a series one and series two. So what kind of investors should these different stages of startups be looking out for?
So if it's a tech company that is tackling a significantly large market and its total addressable market is in the billions, right? Then from that perspective, you can start with, obviously do some bootstrapping and then maybe go to angels or angel syndicates to de-risk and get to the next phase. And then you can look at a seed round that might involve some VCs and then a Series A, Series B, etc. So I'd say the stage of the company, um, if it's earlier and how much it's trying to raise, then you'd really want to focus on angels, maybe even go into an accelerator, try and get some grants and non-diluted funding. Maybe speak with family offices. So there are lots of different capital sources that would be probably better tailored to earlier stage companies where there's a lot more risk on the table than than there isn't when you come to a company that's already
Yeah.
doing 10,000 in monthly recurring revenues. Then at that point, it's more suitable to VC. 10,000, I'm talking about dollars now, in MRR typically starts to get the attention of VCs.
Right, that's clear. Thank you very much for throwing more light on that. So now let's move ahead to the startup aspect, the entrepreneur aspect now. So I know that one way to get the attention of any investor is at the point of you making your pitch, and we know that pitch is a very very strategic and should carry your story and your traction and whatever you're doing and how you want people to see you. Of course, you're selling your vision, like I do put it in my own words. You're selling your vision to a third party who could be your potential investor. You can never tell. So what are those key elements that should be included in a compelling pitch for an investor?
I'll say within a compelling pitch for an investor, you really want to highlight what it is that you do in language that they would understand. So talking about
Yeah.
your business, if it's a B2B SaaS play, so that's a business to business software as a service play, if it's a marketplace, just summarizing what it is quickly to the point, highlighting the size of the opportunity, problems are opportunities, right? So quantifying what that size is would then allow an investor or potential investor to know how much attention they should be paying to you. Also, very quickly, try to highlight what you've done, the great stuff, all the graphs you've put in, highlight any awards you've probably attained, the stellar team. You want to highlight if you have some early signs of revenue, any partnerships, if there are any entities that you've gotten to sign expressions of interest, you know, that gives more credibility to your opportunity. If there's any research or data to back your venture, that also helps because, as they say, opinions are the lowest level form of proof. You need to have data to back what it is you're imagining could be
Yeah.
possible for your venture. So go beyond, oh, I think, or my parents think, or my friends think, to the data shows. you know, if you can put that all in your pitch, then it helps to make
Yeah.
you a lot more compelling. And the final thing I'd say is be clear about how much you need and what it is that you're sort of offering the investor or the opportunity for the investor to engage and to probably disengage at some point. So the disengagement piece, for instance, is okay, you're going to raise another round, which would allow them to do a partial exit if they need to. Or you're going to IPO, which would allow them to do, an exit at that liquidity event. And the opportunity to engage, be clear about okay, what you be allocating the capital to, what the needs are, And that would allow the investor to think through, okay, I can help with this, I can help with that. This is why I should be part of that particular opportunity. So being clear and doing all of that within 3 minutes is what I recommend. Anything longer than 3 minutes, not ideal. You want a very succinct pitch.
You know, you spoke
Or,
about data
yeah,
and statistics. I think that's really key in a way, because I was in a couple of pitch events in recent months, and I could see how the panel of judges were very much interested in the data that you were presenting. So I think a lot of founders or entrepreneurs do that mistake of not getting their data very much right, because I think that is where they could just hold you by the jugular and like, how did you come to this? How did you get to this? What did you do to get this? Can you verify this? So it was very shocking that you see some persons can't even verify their data that they have, and this is very wrong. So how do you think these founders can better work with verified like data and statistics about their traction, because I know that these investors are looking very much at your traction, and you need to also put out something that would interest them. So how do you bridge the gap between impressing your investor with traction and not overhyping what you have? Because as a startup, it's almost like true that you're not going to be having a lot of huge numbers, but if you do have, how do you like demarcate this from just falsifying information that you have?
so I guess there are two things here. So first, around data, a massive shout out to Stairs Nigeria. They're a great data repository. Try and work with them and whoever else you'd find to get information around particular segments. When it comes to pitching and using data, use the data, present the opportunity and the size of the market. It's okay to think big, sky is the limit. That's not the issue. But when you're representing what it is you have done and the traction you have so far, don't oversell that. Don't say you have a team of 90 people when actually you're just three. Keep things real when it comes to
Yeah.
the data points that represent what has happened to date. And then the future vision of what it is you're trying to do, make it as, high up as you can imagine, but then weave that story, that believable story as to how you get there. And that's where the assumptions you make, the investors will test and determine if, do we believe that or not. But you need to have a big enough vision, but you have to be very real about what you've done and where you are. Don't make up stories about where you are right now, because that would come out in the wash very quickly. In the due diligence phase, when it comes to determining what's present, everything you've said that's not true would be a quick fire no. And you wouldn't get through. You wouldn't get past the due diligence phase.
Yeah, just like shooting yourself on the leg. All right, so thank you very much for putting more clarification on data and your pitch. So, is there anything you want to add as regards to what should be in a compelling pitch when someone is pitching to an investor before we wrap this one up? Is there any other thing you
So
want to add
I
up
was
to that?
I was wrapping up by saying keep it brief, 3 minutes max. The reason is, with a brief pitch that touches on all the various elements of your company, you give the investor the opportunity, or the capital allocator the opportunity to get that helicopter view. Remember, most of these investors are they have ADHD. No, I'm kidding. No, most of them are time poor. So more seriously, they want to get to the point. So give them the helicopter view on everything, and then what you want to do post 3 minutes is give the investor a chance to ask you questions, and they will then ask you questions on areas that they are interested in. So there's no point spending a lot of time talking about your product or some data you have that's irrelevant to them when they are more interested in knowing about something else. So keep it brief in terms of the pitch, and then quickly move on to a more conversational style engagement where you are listening to what they are asking you specifically and responding to that. That's what I like to say.
Yeah, thank you very much. Thank you very much for. I think that's brief enough and like straight to the point. So, summarily, if you are a founder or an entrepreneur who wants to pitch to an investor, so you should consider generally making your pitch a brief one. I think the ones I know, I think the max minutes they give is 5 minutes. So you should not be exceeding 5 minutes so you don't get destabilized when you are like putting out your idea out there. The worst thing that can happen to you is to lose your focus and confidence. So make it brief, and then you should let it be a story. Okay, let it be that you're sharing your vision and you're projecting the future of what you're building into the minds and mentality of your investor. I think that works a lot of magic. And then your data, your traction, and then you should try not to falsify, because if you're investigated and you see that some stuffs are not moving well, then it's just like you've spoiled the whole thing that you've been trying to build, the impression you've been building from start. So you need to like go back and to the drawing board and try to fix some things. Okay. All right. Thank you very much. And we're moving ahead from that. And now let's look at the investor itself. Remember, we're trying to look at the investor's perspective. So I know that there are a couple of founders watching this right now and innovators who will be watching a replay of this. So from the investor's perspective, what do you think? I believe you have an experience in this sector. What do you think that the investors are looking out to investigate when a founder or an entrepreneur makes a compelling pitch? What are those things they are looking out for to investigate, to be able to convince themselves, okay, this guy, I like what this guy is doing. I want to put my money here. So what are those things that they are looking to investigate so that these founders can brace time for the war?
So typically, and it depends on the investor, right? Some investors run a more thorough process than others. Others would be very light touch with their due diligence. So with angels, or to an extent, maybe some family offices, then the process might be less rigorous. But if you're looking at maybe VCs or even banks to provide loans or trade financing options, investors would, those sort of capital allocators would want to test lots of the things you've said about your venture. From basics, the legal due diligence. Does this company have the rights to operate? Do they have the correct entity? Is there any encumbrance on the IP? So making sure that there's the whole legal framework would be level one. The next thing would be ensuring that the investor has, or the investor sees your financials. They want to make sure that you have the right financials, models, your cash flow forecasts, your profit and loss statements, your balance sheet, all of that needs to add up. That's a finance DD. They will test some of your unit economics and any assumptions you're making around your numbers. That's very important. Another layer of DD, so apart from the legal and financial DD, there's some technical DD. So the technical DD might focus on what algorithms or solutions you claim you have. They'll kick the tires around that a little bit, test it as a user from a user's perspective. They want to open underneath the hood to just take a look and get some comfort. And this is just to make sure that, yes,
Okay.
everything checks out. So remember, most of the VCs that are putting money aren't putting their own money. It's money that they've raised from limited
Yeah.
partners. So they need to go through a level of due diligence and financial, technical, legal rigor to give their LPs comfort that they have done everything that they can. They'll literally shake you down to make sure that if there are any skeletons in the closet, they'll come out,
Loopholes, yeah.
and they don't
Skeletons in the
invest in
cupboard.
something. Yeah, they don't invest in something that is a dud really. So those are the main areas for
I mean, nobody actually
investors
wants
that
to
go.
throw their money away
Yeah,
like that, right?
of course not. No.
All right. quite interesting. So I believe that people are picking some of these points. So if you're hoping to go out there with your idea to sell it to an investor, then you should be having this information ahead of time so that you are not taken off guard. Okay. All right. So another thing about getting funded or approaching an investor. So I think these startups should have some kind of tactics. I could call it a skill, but let me say tactics, negotiation tactics. Okay, so I believe that when once you are an entrepreneur, a founder, you are a businessman automatically. So you ought to have negotiation tactics. So it's not just all about the investor because they are bringing money, but it's your idea. Okay, for God's sake, it's your idea, it's your innovation, it's your baby, literally. So it doesn't matter what the money is saying. You could always get another investor next time. So now what I'm saying is, how do you play your tactics when it comes to negotiation? Because I know I've heard of instances where some ideas got like you literally miss your idea, you lose your concept because of the kind of investor that you've called on board to your company, and everything goes there well. Okay, so how do you ensure that you have negotiated? So what are the things that startup founders should look into to ensure that they come out of that pitch or that relationship being the best of the negotiator to their own interest, and not just losing their company or something like that in future?
Just to clarify, when you say the ideas get lost, do you want to just expand on what you mean about those ideas getting lost or losing the company?
Okay. Let's say I call an investor on board, and I don't really pay attention to what they need, like break equity and stuff like that. And then at the end of the day, I discover that I'm not really gaining much as the initiator, as the ideator of that company. I'm just like a figurehead. So that's what I'm trying to put out there. So how do you ensure that when once you're calling in, you're onboarding an investor to your company, you still retain at least a larger say in how your company is being run? I don't know if that's clear enough.
Okay, it's clearer. So this is more around ownership and control. So with respect to
All right.
giving away equity specifically, and even debt to an extent, there's a degree of ownership and control you trade off, right? You make those trades for
Yeah.
capital. Because initially I thought you were talking about the idea changing or pivoting from one concept. And I was going to say, well,
No, 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 no,
the idea
no,
that you have initially
no,
doesn't have
no.
to be the idea that you scale with.
Yeah,
That's natural and normal to pivot.
yeah,
But with respect to ownership and control, there are standard models that apply to each stage, and it's worth looking up what these numbers should be. Um, I know in emerging markets it's harder to negotiate fairer deals because the cost of capital in emerging markets is higher than the cost of capital in more developed markets. So it's a slightly different game that entrepreneurs have to play in in many developing countries. Um, but typically, you want to give no more than 20% dilution in any round. And each round typically should give you at least 18 months, ideally up to 20 months of runway. So the concepts of runways and rounds, hopefully the audience is familiar with. If not, please Google. But I would say 18 to 24 months runway, which is how much time before you'd need another capital injection, if at all, is key for each raise that you go through. And 20% dilution would be the max. If you can get it closer to 15 or even 12% dilution, that's good negotiation. And how do you negotiate? Your position is strengthened by how much risk you've taken off the table, how much you've proven that you have been able to accomplish without the investor. That's your negotiating position. And it's a conversation. I'd say the negotiation style will be just as unique as that particular interaction. It's like going on a date. You want to put your best foot forward, but you also want to make compromises. Otherwise, it's not a
yeah,
relationship. Both of you would have to feel comfortable. It has to be a win-win. Um, yes, it's the
yeah,
entrepreneur's idea,
definitely.
but the entrepreneur also um, needs, in many cases, would need external partners to take it to the next level. I think being um, being fair and being aware of the options, is something that would help with anyone that's trying to negotiate hard. So if you have very few options, then it's difficult to negotiate in your favor, right? You need to make sure you have some options. That will give you more strength to your negotiation. Know your numbers. Know what's pre versus post revenue. Sorry, pre versus post round
Yeah.
valuation. So the pre money valuation, post money valuation, two different things. Don't get caught out on that. And get an advisor. I mean, I know I'm biased because I'm an advisor, but I'll say get an advisor to support you through the round. Remember that you might be doing this for your first, maybe second time. Advisors have done this dozens of times, maybe many more times, and investors
Yeah.
have also done this dozens of times. So
Many times. So you could be
there's an
the
information
newbie here.
disadvantage if you don't have someone that has been through the mill, that has gone through several deals, several transactions, and has worked on literally dozens of deals, then it's harder to gauge like what's market sensible and what's just taking the piss.
Yeah. Yeah, thank you very much. Yeah, I think that's clear enough. So, the highlight of everything is to have an advisor. Okay, the investors you're liars you're dealing with, they've been in this business for some years, and then you could just be an emerging entrepreneur who is in the game, and you make some decision that wouldn't be in your favor. So it's best to always have an advisor out there. All right, so let's wrap up this section. Before we wrap that up, so we have the comments section for questions. I can see some comments from our viewers here. Yeah, emojis from Mind Nation. Wale Oguntokun. Okay, nice tips. Thank you and well done. Yeah, that's to you, Nzube. Yeah, and
Let's fire
Benga
away. Ready for the
Adeyemi,
questions.
insightful.
Okay.
Yeah. 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 So if you have your questions, you've been viewing this and you have your questions, okay, you want some
One thing I'll
clarifications of some
mention
of the
while you're
things
going
we've
through the
talked about here
questions,
so
one thing
far.
I'll mention, when it comes to
Okay.
fundraising, one thing I have to share with many entrepreneurs is that it always takes much longer than you imagine it would.
Okay.
Most people come to me thinking,
Mm,
oh, we can close around
mm.
in a couple of weeks or a couple of months. I'm like, don't be delusional. It's not going to take that short. It's
Yeah.
usually a process
It's not
takes
magic.
6 to 9 months at best. 6 to 9 months at best, and that's if
Yeah.
you've got your ducks in a row, you've prepared your data room, you've done all the things you need to do. But usually the assumptions around the timeline for fundraising are way out of sync with the reality. And remember, in this
Yeah.
market, remember we started by talking about the macro conditions. This market is particularly tough. Access to liquidity for early stage startups is more challenging. So guess what? It's going to take slightly longer. So if you don't have like nine
Yeah.
months as your minimum expected timeline to fundraise, then you haven't yet come to reality.
What it is. Thank you very much for putting that clear. All right, so we've talked about positioning for identifying your potential investor, positioning for them, pitching to ensure that you catch their interest. We look at the couple of things that they are interested in when they want to invest their money, because yeah, it's business and they don't want to throw their money around where it's not going to bring in some ROIs. Okay, and then now let's I think it's now time we talk about utilizing the funds that have been raised. Okay, over time we've had scenarios in propaganda and tales of startup founders who raised funds and decided to get yourself the best cars around, the best clothes around, and everything. So, so it's about getting funding for your personal life. So I think people need to like differentiate between your business and yourself. Okay, so you're not getting funding for yourself, you're getting funding for your innovation that you're creating solutions to problems that exist in the society. So I mean, if you're doing it the other way around, then I think you should be apprehended. Okay. So just to put this in the limelight out there. Okay, so how do you think startups and entrepreneurs can better utilize the funds that they have raised over time to ensure that I mean, everything works out. The investor is happy, and you are happy at the end of the day. I know no fund is like totally enough to
I
do
hear
to build
you.
what you're
I
building,
hear
but
you.
to a
And with
certain level, yeah, yeah,
yeah, with respect to just that deployment, obviously, taking a salary, which should be minimal, and typically founders, CEOs,
okay,
co-founders get paid very little in the first few years, if at all, because you're taking a sacrifice. Remember, you're building a company, and you're deferring that, you know, short-term gratification. You're building a company that's potentially worth millions. You'd be a paper millionaire, perhaps, relatively quickly, maybe within 3 years, you could be a paper millionaire. But liquidity and cash flow is not something that you as an individual will probably enjoy until maybe year five, perhaps. So, and that depends on several other factors. That depends on how liquid your business is, that depends on what other fundraising events you've had. But typically, the capital you raise as part of your pitch, you remember we talked about how you pitch? I talked about placing numbers around what it is you do with each of the
yeah,
you know, pennies or
yeah.
pounds, your
Once you've
naira that you
received,
raise. So you're going to spend money on operations, you're going to spend money on marketing, spend some on your tech stack, spend some with some regulatory considerations. It's going to have to cover things that would be of long-term value to your business because you're building the value in the company to get to the next milestone to unlock more cash potentially, either from sales, which is always the best when you can get value from clients, paying clients, customers that value your product or service. That's always
yeah,
good. But if you're not getting to that stage, then it's getting to the next stage that gets more capital allocators interested in placing capital to support you to scale beyond that. So no, I think if you're into get rich quick schemes, then starting up a company is probably not one for you. Most companies fail, as I'm sure your users or your listeners know. Within the first 5 years, I think most companies are, this is a large statistic. I forget the exact number, but I think it's over 80% of companies that fail within the first 3 to 5 years. And I think that's a global statistic, not just in the UK. So it is a tough business, but you have to be in it for the long haul. You need to build the right partnerships. You
yeah,
need to be able to um, just delay that instant gratification and focus on building value in the core business, making sure you sweat
yeah.
each dollar in your business. You build,
Out.
you build the company, no, not you.
Just
A
keep
personal
building.
survival budget, yeah, just keep building that funnel, keep getting those sales, keep de-risking, keep getting to the next level. That you eat, sleep, and breathe your business in the first few years. That's natural.
Some mentors would say that entrepreneurship is a marathon, it's not a sprint. So you don't if you're expecting it to be a quick thing, a quick get rich platform for you, then it likely not going to work.
Agreed. I agree with that point.
Yeah, I totally also buy the idea. You said something about delaying your instant gratification as a founder. I think that's very key because if you're going in to quickly get the money, then you might see that it doesn't work out in your favor. So you have to look long term. What am I building? Am I able to even sacrifice my own money to ensure that this vision of mine comes to reality? So that's that for that. Thank you very much for the session so far. We've been calling in for some questions in case there's any, but I know we've been very much like straight to the point and simplified enough for anybody to like get the tips and everything we're sharing. So now it is we're wrapping up and now we're getting to the last segment of this Tech Round show. Yeah, you're watching this show courtesy of Techbuild Africa. So you can follow us on all platforms at Techbuild Africa on Instagram, Twitter, Facebook, and yeah, we just got on TikTok to reach a wider audience. So you can
Yes,
always follow us
like,
everywhere and
subscribe,
join the
share,
session.
and
Yeah.
comment. Yes, has to be done
Very
on all the
important. Thank you
socials.
very much for
Yes,
that. Yeah, yeah, yeah.
pleasure.
So get to play a fun game before we say adios. Okay, we call it guys here. So are you ready for this? Are you ready for this?
I was born ready, but I'm kind of scared
I
at the
said,
same time.
okay, don't Don't be scared. I'm not gonna ask you to speak Igbo because I
Okay,
don't
let's do
know
it. Just kidding. Ready.
it's okay.
Let's do
So
this.
all right. All right. So the first one, quite easy. So your favorite sports, are you a sporty person? So what's your favorite sport you want to talk about?
So the line cuts out. What my favorite sport? You said. I'm the least
Yeah,
sporty
that's what I
person.
said. Your
I
favorite.
play chess, and I also like to run every now and again, maybe once a week or once every 2 weeks. I like to go jogging or running, but yeah, even the gym hasn't seen my brake lights in a while. So I could,
Quite interesting. Quite so.
yeah, just kidding.
So
Yeah,
I don't know if you answered that. I couldn't hear you. So I was asking for your favorite sports.
chess.
Interesting. This kind of you say smart people like she's trying to sell
I
you
don't know about
some
that.
that
My brother plays chess, and I don't know if it's
someone
very
is
smart.
someone okay, someone said I should ask you right?
I am a nerd, yeah. If you want to play chess, find me on chess.com. It's Nzube, my first name, Nzubeski, SKY. You know, the Russian, everyone
Oh
has a ski. Nzubeski is my chess name. You better be
yeah,
good.
oh
If you're not
interesting.
good, don't play me because I need good players.
I think I
Okay.
should fortify myself
Next
and I'll
question.
find you and see how to defeat you. All right, so is it gonna be the traditional or continental dishes for you? The
Ooh,
traditional or
clearly
continental dishes for you?
traditional food all the time. I cooked some
Mm.
okra soup, seafood okra last weekend.
Mm.
Hanging. I love traditional food. Yeah. Next question.
So you're trying to pick a choice now. Sorry,
Oh, you
you
didn't
made
hear
a
me.
choice.
It's
Is it? I think is
traditional
it traditional for you? Okay, interesting. All
all
right.
day,
So
every day.
now
Yeah.
we're living in a world. Yeah, we're living in a world where people work remotely and hybrid. Now we have hybrid, we have remotely, we have on site. So would you prefer to do a remote job or
Hybrid, maybe coming out once a week, at most twice a week, but I rather work
yeah,
remotely. It's efficient for me, less travel time, less
yeah.
noisy. Today I'm working from the Institute of Directors. I wanted a nice space for
Okay.
you guys, but normally I just stay at home and work from my home office.
Yeah, quite interesting. Quite interesting. Okay, to the next one, are you a one what kind of person or a team player?
100% team player. You can't do anything great
Can do it
solo.
alone. Yeah.
It has to be with a team. I'm fortunate enough to have good teams around me, and they've helped make lots of things possible. So, team player.
I give it up to you, team man. All right. So media famous or low key? Which one would I describe you as? Media famous or low key?
That's a tough one. I used to be low
Mm.
key a lot, um, but now I'm doing some stuff in the media, like fashion, TV, podcasting. So, I don't mind being media famous, but I'm more interested in the bags that come with it. So, I'm focused on wealth
Yeah.
creation,
So
not necessarily, yeah, not necessarily
I'm sure
likes
you
and
can't even
clicks.
go low key because you were running your. I think you started your vlog. So I mean, it's not even possible to be low key. I'm sorry. So on to the next one, the last one, not the least. So I know you chose African dishes, traditional dishes last time. So now we have the suit and Ankara. So would you rather appear in the Ankara or a corporate attire?
It depends on
Your
where I'm
option.
going. So, I mean,
Okay.
right now I've got a suit, a blazer on, but I have like different styles. Depends on where I'm going. So, yeah, that question doesn't have one answer. What's the context? What's the location?
So are you saying that you cannot pull up to an important occasion with the Ankara? Like it's not because it's not English or something.
It depends. No, no. So, for instance, I met King Charles in January, and I had a traditional outfit on. So I had an
Okay.
outfit that was made by a
Okay.
Nigerian designer, and for me, it was important. Many of my colleagues had suits. No shade, but I was like, while I meet King Charles in a suit, I wanted to wear something that was traditional. So, but it depends. If I'm going to a certain type of business meeting, and I don't want it to be the point of the conversation. I don't want it to be distracting. Then I'll just wear a suit. I look good in a suit and a tie, right? But if I'm going to certain spaces where there's room for cultural expression, then I'll, put the
Yeah.
full East, South, West Africa, North Africa. I'll come through. I'll come through the fashion, but it depends on the space I'm
Yeah.
occupying and what I'm
Yeah.
trying to give. Check out my Instagram. You should see me on Instagram when I
Okay.
dress up. I do a lot of
Even
African
though
inspired stuff. So,
I would try to be
yeah.
okay. Even though I would try to be I say biased or culturally faceted, I would have said so. You said something about when you're going to an event that would need cultural expression, but the suit we wear, it's someone's culture. So if I choose to appear on Ankara, I think if I appear on suit, that's someone's culture, so to say. So if I appear on Ankara, that's someone's culture. So all of them are cultural expressions, but let's leave that for another day. So I don't complicate issues here.
It, no,
But
it's
that's
a
cool to know
fantastic
that.
debate. It's a fantastic, and I see your point. I think
Yeah.
generally yes, but I'd say it's slightly nuanced because there's a neutrality that comes with a suit. So I
Okay.
wouldn't say a suit is necessarily purely Western. It's a business language. Um, and there are different ways you can wear the suit that will still have a nuance to it. But yeah,
I have various ways I want to counter this, but I think we should fight this backstage. No problem.
let's take this offline. Let's take the fashion wars
Thank you very
offline.
much. Thank you very much, Nzube, for even
Yeah,
holding the fort while I was off with the whole technical issues. Yeah, and it's been fun. I can tell you, it's been fun,
thank
insightful,
you.
and interactive. Yeah, on tech rounds. Yeah, so I could see someone was even speaking up for me, Mr. Akinyemi Sheun. Thank you very much. It was like maybe it's his network. He should join back soon. Yeah, I was back, and I'm glad to have ended this the way I started it here on tech rounds. And Nzube, just before we wrap it up, can you tell us how people can get to connect with you? Because I'm very sure by the lots of person that will be coming across this content, they will want to reach out to you for
Sure.
coaching or mentorship advice on how to position themselves to investors for funding or how to go ahead their funding processes. So I would love you to share how these people can
The
connect with
the
you.
best way would be if you reach out on LinkedIn, but don't just click connect. Personalize the invite. So on LinkedIn, instead
Yeah,
of clicking connect, add a note. Just say, "Oh, we saw you in tech rounds. Love to have a chat." Then that way, I kind of connect the dots. The other way is I try to share more information about fundraising and stuff on my social. So Twitter has some information. The Crowncast website has some information, so you can consume the content. It's crowncast.com. I'll type it in the comments shortly. So CROWNCASTE.com. I'll say also if you go to amoo.co.uk, AMOO.co.uk, you can get some more information and reach out through there. So, multiple ways to reach out to me, or hey, just reach out to me through Emmanuel, who would be able to, or
yeah,
Techbuild Africa, who would be able to put you in touch with me. So, thank you again for the
yeah,
space
yeah.
and
Thank you very
for
much. Yeah,
having this
yeah. Of
open
course.
conversation on fundraising.
Yeah, thank you very much. I should be thankful more. And once I get people that wants to reach out to you from the community, I would always ensure I act as the middleman to Mr. Zube. Thank you very much. And Dad, please do well to follow us on all social media platforms. Like I mentioned earlier, our site is techbuild.africa. You can find us on Google or any search engine. Okay, and then you could consume our content there. Find us on Instagram, TechBuild Africa. Find us on LinkedIn, TechBuild Africa. Find us on Twitter, LinkedIn, TechBuild Africa. Find us on TikTok. Now we're on TikTok. Voila, TechBuild Africa. And then you can connect with me to LinkedIn. I'm very active on LinkedIn. Yeah, I've been getting the both from innovators. Yeah, we've been talking a lot, so you can meet me on LinkedIn too, and we can see how we can talk about anything tech and
You should get
innovation.
on Blue
Okay,
Sky as well.
Emmanuel
Blue Sky is a
Amogu.
good one. Yes. If you're not on Blue Sky yet,
Yeah,
that's the feature.
yeah, Blue Sky. I actually requested to be on the, I think, on the wet list. So I don't know if it's been approved, but I'm still waiting for that. But for now, I think we are trading right now. We're trying to see how to trade. So yeah, I'm everywhere. I'm literally everywhere on LinkedIn, Emmanuel Amogo, on Instagram. I am El Sabino, but if you type Emmanuel Amogo, I would also appear. On Twitter, yeah, the digital nomad, yeah, I'm there. I am El Sabino. So it will be glad to connect. Thank you everyone once again for making it for tech rounds on this round, on this series, yeah, discussing the funding for startups and how to position for the investor's perspective. It was amazing to have this discussion. And I think it's time to skedaddle from here and get doing with other things. I'm sure you have other things to do. Thank you very much for joining. And yeah, once again, thank you, Nzube, for making it for the round. Yeah. And till another time when I come on board, or when I come to the show with another innovator or thought leader, I want you to keep it there. Subscribe to our YouTube channel so that you don't miss it. And you can always get replays of what we've done so far from past series. Thank you very much. I got to skedaddle at this point, and adios to you. It was nice being here. Emmanuel Michael Amogus signing out.